Here today. It's great to see such a diverse audience of fintech innovators, bankers, fellow regulators, and students. We all play a part in fostering responsible innovation. Responsible innovation requires a few things: having the optimism and curiosity to understand the potential benefits, the rigor and realism to identify the attendant risks, and the collective intent to find solutions to advance a safe and fair financial system. Today, I'd like to speak about responsible innovation in the context of generative artificial intelligence in banking and how bank fintech partnerships may accelerate the integration of the technology in banking. Earlier this year, I laid out two scenarios for Gen AI adoption: an incremental scenario where the technology primarily augments what humans do today, and a transformative scenario where we extend human capabilities with far-reaching consequences. Of course, these are hypotheticals, and elements of both scenarios will likely come to pass. But in either scenario, we should anticipate widespread productivity gains, particularly for banking. Today, banks appear to be moving cautiously with their Gen AI use, which reflects the current state of the technology, as well as banks' internal organizational structure and the highly regulated environment in which they operate. At the same time, Gen AI offers enormous potential to significantly alter the business of banking, provided the risks are managed appropriately. Given rapid advances in Gen AI every quarter, in the not too distant future, we may approach a point in which Gen AI becomes an imperative, a competitive necessity in banking. To prepare for that point, it's useful for regulators and banks to think about the channels through which this competitive necessity may arise. Today, I want to focus on one of those channels, and that's the bank-fintech relationship. Fintechs are well positioned to integrate generative AI into their products and services, and banks have valuable data on customer behavior on which the Gen AI models can be optimized. Given these synergies, competition and cooperation between banks and fintechs will likely spur innovation and accelerate the integration of Gen AI into banking. Gen AI may have benefits for consumers and businesses through better, cheaper, and faster financial services. However, to harness the upsides of Gen AI, banks, fintechs, and regulators all have a role to play in helping to ensure that the risks are well managed. Let me begin with why Gen AI has such potential for the banking industry. The business of banking is data-driven. Data underpin the decisions to set yields on deposits, to underwrite and price credit products, and to manage the attendant risks. While traditional forms of artificial intelligence have become essential in areas like fraud detection, Gen AI offers new possibilities for data analytics, taking into account a broader and more diverse set of data. Gen AI has benefits for document analysis, which could be applied to improve credit underwriting. Beyond data processing and analytics, Gen AI-powered chatbots are already helping assist in customer service. While we still breathe a sigh of relief when we connect to a real customer service representative, this paradigm may change. Gen AI has the potential to enable such high quality and efficient customer engagement and correct answers that customers may come to prefer Gen AI agents to people. Gen AI chatbots can break down complex tasks into component parts, split up tasks between several AI agents, and help customers make informed decisions. They can also replicate the human touch, adapting to the level of sophistication of their customers, anticipating the customer's needs, and being empathetic to customer experience, perhaps better than some humans. And moving to trading and capital markets, Gen AI-based analytic tools can build on existing algorithmic trading capabilities by harnessing an enormous knowledge base in both the public and private sectors. These enhancements have the potential to enable decisions that are faster and more informed, although with some attendant risks, as I've discussed in other contexts. Given the potential for Gen AI to enhance banking, why do we not see widespread integration of Gen AI-enhanced products and services in banking today? There are several factors contributing to that current state. Let me highlight some key reasons. Of course, one reason is that banks are being appropriately cautious in the highly regulated environment in which they operate. Beyond that, for some of these applications, the technology is not fully mature. For instance, Gen AI systems may still hallucinate, generating plausible sounding but inaccurate information. Relatedly, because Gen AI usually involves stochastic processes, answers can differ in response to the same query asked at different times or to similar queries. This is tough to square with the requirements of banking, where decisions must be well controlled, numerically and legally precise, explainable, and replicable. Information security is another key concern. To the extent that a Gen AI powered agent is accessing sensitive customer data and authorizing transactions, it becomes an attractive target for malicious actors. Further, as Gen AI models process vast amounts of data, there's a risk that proprietary or customer information could be inadvertently included in the model's outputs or responses, leading to legal violations and privacy breaches. Moreover, business processes at banks have not evolved to optimize Gen AI usage. Gen AI requires data and an infrastructure to be effective. Many banks have existing tech debt, and their data storage is siloed and not optimized for firm-wide analysis. Furthermore, there may be organizational practices that may make it hard to evolve existing processes to ones optimized by AI. The technological and organizational limitations are real. Nevertheless, I think it may be only a matter of time before the technology advances so that these are engineering, product design, and risk management challenges rather than insurmountable problems. And with regard to the business process issues, I think fintechs have a real role to play in helping to accelerate responsible innovation by banks in this space. As Gen AI technology continues to develop, there's a good chance that fintechs will help drive widespread Gen AI adoption in financial services. There are a few reasons why this may be the case. First, fintechs are generally young companies with a clean tech stack and don't have to integrate new technology into old infrastructure. This allows them to make the most of their data and to continuously integrate the latest AI capabilities. Second, these firms have financial and time constraints. Early funding rounds provide limited time and resources to demonstrate outcomes and drive fintechs to find effective, quick solutions, which often involve creative uses of cutting-edge technology. Third, because fintechs usually start as a simple business idea and focus on moving one product to production, they can optimize their tech stack for a single outcome instead of balancing the interests of competing business lines. These attributes of fintechs can make them symbiotic with banks. Banks have deep customer data, and data are a key input to effective application of machine learning tools, including large language models. Banks are also able to look across a range of business lines and use Gen AI to customize integrated sales strategies, and they have the scale to adopt global Gen AI solutions for compliance and risk management. And banks have existing customer relationships and mature control frameworks that form the basis of their credibility and trust. Another way to consider the relationship of fintechs and banks is a race between speed and scale. Fintechs have the ability to operate at speed, but start with no scale. Banks, on the other hand, move more slowly, but have scale in terms of investment, customer reach, and risk management. This creates the dynamic where fintechs must attempt to scale their market share quickly enough to overcome the scale and incumbent advantages of banks. And this leads me to my next point. I believe that the bank-fintech relationship has the potential to accelerate adoption of Gen AI in financial services. This may come in the form of direct competition, with fintechs taking market share from banks for certain products, or banks crowding out fintechs by introducing better technology into their existing or new product lines. Such competition usually benefits consumers by providing more choice and better and cheaper products, provided that risks are appropriately managed. It may also create competitive pressure and consumer demand that pushes banks to adopt Gen AI products and solutions more quickly. Alternatively, fintechs and banks may enter into a symbiotic relationship, forming collaborative partnerships where fintechs and banks merge their strengths. Examples of these partnerships may include banks purchasing or investing in fintechs with Gen AI products, or banks and fintechs entering into traditional vendor-client relationships. There's one common theme in all of these scenarios. Technology advances outside of the bank perimeter and rapidly enters the regulated sector. To get prepared for this moment, bank risk managers and regulators should become familiar with Gen AI trends and monitor developments outside the bank perimeter so that they're not caught off guard as this technology quickly enters the banking system. We have a shared role in creating the incentive structure to appropriately manage risks. To the extent that banks are using Gen AI or offering Gen AI products and services, they have the responsibility to manage their risk and should use their relationship to incentivize good risk management practices for fintechs. This means choosing fintech partners that provide transparency and clarity regarding the development of AI tools and have demonstrated appropriate control in development. There's necessary tension here, as banks must understand the tools offered by their fintech partners for their own risk management, while fintechs may not want to share details they hold close, their secret sauce, so to speak. With respect to Gen AI, it is important for fintechs and banks to tackle questions like who owns the customer data and potential conflicts that may arise if a bank's customer data are fed back into a fintech's Gen AI model. Fintechs also have an important role to play in laying the groundwork for good risk management of Gen AI. As I've mentioned before, data quality and model training are critical to safe, sound, and fair use of these tools. Fintech developers should, for example, prioritize identifying biases in training data sets and monitoring outputs in order to prevent these biases from amplifying inequalities or mispricing risk. Moreover, fintech should be aware of how banks manage risks so that the fintech can adapt Gen AI solutions to be compatible with sound risk management practices. And what should regulators do? As I've mentioned, regulators need to stay educated and informed on the technology so that they understand the business case for deploying the technology and the attendant risks. They should review and update existing standards on model risk management as appropriate and engage in public-private forums like this one, where there are opportunities to work together. And they need to explore how and when to deploy the technology themselves, to remain in touch in the changing world and make reasoned judgment about how to supervise the use of Gen AI in the banking sector. These changes will require broad-based curiosity from regulators, fintechs, and banks, combined with education and investment to create a culture of awareness on the opportunity and risks of the technology. Equally as important is leadership to establish appropriate governance over AI and provide appropriate direction on priorities. In closing, successful integration of Gen AI into banking will require both creativity and adoption, as well as getting the guardrails right. That's not a zero-sum game. It's an opportunity for all stakeholders, banks, fintechs, regulators, consumers, to help set the foundation for the benefits of the technology to be achieved and the risks to be effectively managed. In this way, we can help to be part of the sound and resilient financial system that serves all of us. Thank you.
All right. Good morning. Am I on? Yes, I'm on. Hi. Good morning. Kristen Laporte from the Chicago Federal Reserve Bank. I am Vice President in the Chicago Fed and also co-chair of the Novel Activities Program. Wonderful to be able to sit up here with you today, and what a great speech. I'm sitting here listening to you. So many threads to pull on, but I'm going to leave a little room for the audience to pull on some of those too. But maybe start with a bit of a bigger question. We were talking before a little bit about, our first Waymo rides, or my first Waymo ride, and I was just thinking as you were talking, lots of connections to what you were just saying in terms of, where the technology is and regulation, the need to be responsible in the innovation, and where AI is going to take us. It could be augmenting, it could be transformative. So maybe just where do you see the potential of AI to touch on productivity? What might that do with our productivity?
Well, it's a great question. Let me start by saying nobody knows the answer to the question. We can ask our generative AI tools on our phone. But What I've tried to do is think about different kinds of scenarios. So what would it take for generative AI to augment existing productivity? What would it take for generative AI to become a truly transformative technology that really changes society? And then to think about what would happen with productivity and labor in both of those kinds of circumstances. The reason people, I think, are very excited about the potential for generative AI is it has characteristics of a general purpose technology. What does that mean? It can be, it has been already widely adopted, certainly by consumers. It has the characteristic of continuous innovation, and it has a characteristic that it generates knock-on innovations in other sectors. It also has characteristics of what people call an invention of the method of invention. So it's like a telescope or a microscope. It helps you see other things that you might accelerate not only its own R&D, but R&D in other sectors. And so in that sense, it can rapidly accelerate innovation in society. In kind of a, you can think of maybe three scenarios. One scenario is everything's been overhyped, the technology won't work, and it's going to be a bust. That's sort of scenario one. I think there's some characteristics of that right now in the sense that it's probably overhyped in the short term, what it can do in the next year or two. But if you look a little bit longer, if you look at 5 years or 10 years, I think we're much more likely to be in the second or third scenario. In the second scenario, I would imagine generative AI significantly increasing the productivity of work. So what will that mean? Some jobs will change. The tasks, you can think of a job as a bundle of tasks. Some of those tasks will be done by generative AI rather than by a person. And that means that that person can be much more productive in doing their job. It will destroy some jobs. Some jobs will just disappear because generative AI can do them more cheaply and efficiently than a person. And some new jobs will be created in areas that we've never heard of and we don't know about today. And that's been the case with technology over time. If you think about, when the steam engine was invented, people thought, oh, this is going to be, the end of work as we know it. What will we all do?
Yeah, Jack Henry.
Yeah, and it turned out that new jobs got created and we became more efficient, and society took on new things. So in the second scenario, we're a much more productive society. Jobs are changing. We are better at doing tasks that we know of already. So, for example, people use generative AI to look at radiology screens. And generative AI, it turns out, is very good at pattern recognition and can help perform better on radiology screening. So that would improve the efficiency of that kind of task. In the third scenario, generative AI does all the things in the second scenario, but is even more transformative. It becomes much more central to the process of discovery in our society and may accelerate science in all kinds of ways we don't know. It might help us cure diseases that we think are incurable. It might help us harness fusion energy in ways that are more productive than energy sources today. So in that third scenario, we might get even more upsides to productivity, rapid productivity gains in 5 or 10 years, but it'll also be more disruptive in terms of displacing jobs and changing the way people think about work. And so I think we have to be attentive to each of these scenarios when thinking about the risks and rewards that generative AI might provide.
It's fascinating. So many, I want to grab on so many things there. But you talked about, responsible innovation. This is something that we think a lot about at the Fed, and all of the potentials in the various different areas you talked about. So how do we, as regulators, kind of strike that balance of really encouraging innovation, but also being aware of some of these, attendant risks that you brought up and maybe where we are on the inflection point.
First of all, let me just say that is the hardest job. It is so difficult to get that balance right. And I will say, sometimes I know when people who are not in the government hear the word responsible innovation, they think we mean don't innovate. They just don't believe us when we say responsible innovation. But I think that's the right, responsible innovation are the right set of words. We want to encourage innovation, and that requires being curious about the upside potential, the potential benefits from innovation, the ways that it might help the financial sector better serve customers and businesses, the way in which innovation might help with risk management, the way innovation might help actually with compliance. So innovation, being good at responsible innovation as a regulator requires us to be curious and open to the ways in which innovation might benefit society. It also requires us to set guardrails. So we want to make sure that as innovation is taking place, it's done in a way that is consistent with the law. We don't want banks, for example, fostering money laundering or terrorist financing. So compliance with the law is important. We want to make sure that as banks are innovating, they're protecting their customers, that they have the right risk management in place for customer protection. And we want to make sure they're doing it in a safe and sound way, consistent with their approach to all of their risk management practices. So we have to be curious and open to the innovation, and we have to set guardrails that permit that innovation to occur consistent with those basic objectives.
Yeah, absolutely. Something I think really important that you were just mentioning in this idea of, so being curious and open and then understanding the risks, but in order to really understand some of the risks, I think you have to really understand the potential of the technology, right? And I think that's critical to sort of see forward, not just maybe what's here today, but what's forward. So how do we, maybe regulators in particular, like how do we really ensure that we're informed and we understand what's out there?
I think that's absolutely critical. I mean, we need to make sure, as we do have, at the Fed, we've got the group of people in the novel activities team whose job it is to stay completely up to date with the new technology and to make sure that that information is disseminated and diffused throughout the Federal Reserve System so that when supervisors see a problem or an opportunity, first of all, they recognize what they're seeing. Or if they don't recognize it, they know to ask the question, hey, I don't understand this. I better figure it out, or I better ask somebody who knows. So not being in your silo, getting out of your silo, looking around, making sure that we, through training and through outreach and through other measures, stay educated, but also trying out the technology ourselves. So making sure that regulators are experimenting in a safe and careful and controlled and monitored way, consistent with our practices, but experimenting with the technology so that we understand what the potential upsides are. I don't use generative AI at work. I'm not one of the approved use cases for Gen AI in the system, but I've got on my personal phone, I've got five, I guess, different Gen AI apps. And for non-work things, I play around with it to get some familiarity with the way in which the technology might be beneficial. So that's just an example.
Yeah, that's cool. My dad's a huge fan of ChatGPT. He's always, doing from real research to writing little poems for the Christmas cards.
Oh, that's great.
I'm serious. It's funny. He's more tech forward than I am.
How are the poems?
They're good.
Yeah.
I mean, he'll say, like write something up in, 18th century English or something. He's just, he has fun with this sort of stuff. But so it's pretty good. And then, hey, have you asked ChatGPT that? No, Dad, I haven't done that. But it's pretty cool that he does that. You're also making me think in the guardrails, like my daughter's learning how to drive. So it's one of those, right? We want her to drive. We want her to be able to do all the driving everybody around and herself and not us, but you got to do it responsibly in the right way. So maybe switching gears just a little bit before I open it up to everybody. You also mentioned a lot, which is so very true, how banking is a data-driven industry, and fintechs can help a lot with this. They often come in with nice, new, clean stacks of data, tons of customer data. So this brings to mind a bit this open banking and this idea of sharing, porting your data around, owning your data. So where do you see the future of open banking going?
Yeah, well, I would say, in a big, broad brush way, open banking is here to stay. I think open banking is an important innovation. We're seeing banks and fintechs in the United States do this activity. We're seeing it in many, many other countries around the world. And I think open banking is important because it empowers consumers to make the decisions that they want to make about the kinds of services they want to have, whether that's budgeting services or switching banks or investment opportunities. And so I think it makes sense for banks and fintechs to continue to invest in that space. There's obviously controversy over the rule writing in this space. I don't know where that's going to land. But regardless of what happens with the rule, I think it's important for banks and fintechs to continue to innovate.
Yeah, excellent. Excellent. All right. I just realized I haven't been real focused on time, but let's go to the audience for some questions.
Don't be shy.
Right back here.
Thank you, Governor Barr. I'm curious on the concept of responsible innovation. I think we typically think of that as terms of our mandates around safety and soundness, financial stability. But I think in maybe your first speech or one of your earliest speeches as vice chair, you laid out our focus on both safety and fairness. So I'm wondering if you could talk about those scenarios, those future scenarios for AI, and think about it from the perspective of fairness, both potential benefits and the downsides from a fairness perspective.
Thanks very much, and I appreciate your attentiveness to my remarks. I do think both are really important. We need to have a safe financial system, and we need to have a fair financial system. And part of what I mean by fair is a financial system that serves everybody, that is designed with intentionality to provide the products and services that consumers need, that low-income people need, that small businesses need, and not just serve more affluent people and large businesses. So a fair financial system, I think, is one that treats people with dignity and provides the products and services that are necessary for people to live their lives. I can go through most of my daily existence without really having to think about the products and services that I need because they're designed for me. They're designed for somebody who is very comfortable and sophisticated in finance. But if I'm a low-income person, I have to worry about my finances every day. I have to figure out how to juggle my paycheck to meet or probably multiple paychecks to meet my expenses. I have to worry about whether I have a sufficient balance in my bank account if I have a bank account. If I don't have a bank account, I have to figure out how I'm going to store money, how I'm going to receive my paycheck, how I'm going to pay my bills without access to a bank. And so the kinds of concerns that I have as a low-income person bring finance front and center in my daily life when I'd rather be thinking about taking care of my kids. And so having a financial system that works for everybody means that people can focus more on the things that matter to them in their lives and less on the risks that they face in the financial system. So if innovation can be used to provide better products and services for people, that's an amazing and important thing that we ought to be open to and attentive to. Generative AI may be one of those innovations if it's used with intentionality. So if generative AI is used to help develop products and services that can be customized, for example, to a low and moderate income consumer or to an individual low and moderate income consumer to help them better manage their finances so that they can go on with their lives in a more productive way, in a more meaningful way. I think that's the kind of innovation that I get really excited about. But it doesn't just happen. You need to have a fintech or a bank or an AI provider thinking with intentionality about product design to meet the needs of the particular customers that I'm talking about.
Good question. Start over here.
Hi, thank you, Governor Barr. Real quickly, you mentioned breaking down of silos. I think you mentioned, probably implied in interagency or intra-agency.
Yeah.
If we were to look outside of the financial services industry and maybe other highly regulated industries, what do you think would be an appropriate analog, or maybe lessons we could learn from other industries that are faced with the challenge of rapidly developing technology? And you mentioned microscope, for instance. I'm thinking in the medical world, right? They're the role of private-public partnerships to maybe supervise some of these. What if we're doing a rethink in the face of this technology? What lessons could we learn from other regulated spaces?
It's a great question. I think that in the current environment we're in, those other spaces are also thinking about this question of how will generative AI transform the work that's being done there. This is not a generative AI case, but I took a Waymo Wednesday night. It was my first Waymo ride, and then I visited the company yesterday. And one of the things that struck me is that there's still a steering wheel moving in the front seat, and the only reason that steering wheel is there is because the federal regulation requires there to be a steering wheel in the front seat that is connected to the car, but it doesn't perform any function at all. So I think in a similar way, we ought to be thinking about what are the kinds of rules of the road that we have that are really not the right rules for a world that if we're in a more generative AI focused world in 5 or 10 years. And similarly, what rules do we lack today that are going to be really important in a generative AI dominant world? And so, for example, we have rules on model risk management today that are really important and that apply to AI in general, machine learning in general, and to generative AI. But we don't focus on some things that happen in the Gen AI world. So, for example, one issue with generative AI is the issue of alignment. Will the machine do what the human thinks it's told the machine to do or not? And can we tell? Or explainability. Explainability is a very important concept in fighting bias in our system, and it's used right now. It's a requirement with respect to artificial intelligence usage, machine learning usage. It's much harder to do that in the Gen AI world. If we're heading in that world, what do we need to do with that basic principle of explainability to make sure that it can perform its function in avoiding bias in the future? In other domains, beyond transportation, people are trying to think about what does it mean for the health system, for example. So the medical system has all kinds of rules about who can do what. What can a nurse do? What can a PA do? What can a doctor do? Well, what is a Gen AI? How should it be regulated as an agent in the medical system? In energy, we have lots of ways that we think about regulating the development of energy. Gen AI is consuming a ton of energy right now. Should it be regulated in some ways because of that huge data usage, huge energy usage? And in the future, Gen AI might contribute to much more efficient forms of energy. I mentioned nuclear fusion. It's possible that Gen AI will help make it cheaper and more efficient and more possible to use nuclear fusion as an important source of energy. And so that sector has to think about how it will evolve over time. And I think if you look really at every domain, it's possible that this new technology will be extremely disruptive in both the positive and negative sense for the development of really every sector of society. So I guess it's being, I would say, rather than looking for a lesson, it would be being open and curious about the ways in which it's likely to transform lots of things we don't know today.
That's terrific. I think we are at time. I know we have a lot more questions. We have time for one more question? All right, excellent. I know you had your hand up, so in the peachish sweater there.
Thanks, Todd. I'm going for Giants colors today since it's opening day, so I didn't quite hit the orange, but maybe the chair is helping a little bit.
There we go.
My question relates to, there was a presenter yesterday, Stephanie Kirkpatrick, she's the founder of Orem, and she commented on the fact that regulation tends to over-index for risks that we've just seen, as opposed to thinking about and anticipating the risks that are perhaps more in front of us. And so she challenged the audience to think about, like, what are those risks that we should be thinking about and anticipating? And I'm curious how you might answer that question.
Yeah, I didn't hear the remark, but it sounds like a great point. And I do think it's true that we tend to, fight the last war. And it's certainly true in banking. If you look at the history of regulation, we close the barn door long after the animals have escaped and the barn has burned down. We have a very strong door attached to nothing. So it is the case that we ought to try to think about new ways that risk might arise. And like generative AI, human beings are really good at pattern recognition. We are really good at recognizing when something we see in front of us fits or doesn't fit into something that we've seen in the past. And what we're less good at, just as thinkers, is trying to anticipate patterns that we haven't seen before and to challenge ourselves to do that. One of the things that I've talked about internally is the importance of thinking about alternative pathways to failure, for example. So just take a given bank. Imagine that bank has just failed. Now think about all the ways that could have happened. So kind of a reverse stress test, if you will. And I think that kind of technique can help free up our brains to think about the kinds of patterns we might see in the future that are not ones we've seen in the past. And generative AI has the same kind of limitation. It's trained on data from the past. The data is the past. There's not future data. And so generative AI might have the same kind of blind spots in thinking about the ways in which things might go wrong. So being good at risk management means being good at thinking, here are the ways things might happen that I've seen before and how to address them, but also thinking, what are the ways that things might go wrong that I haven't seen before? Like force yourself, challenge yourself to assess that, and then ask, okay, what is it that I need to do to limit my downside risk to that kind of pattern? And you might decide at the end of that, the costs of addressing those risks are very high and the likelihood of those risks are low. And so I'm just going to watch that risk rather than change my business practices to address it. Or you might say, having reflected on it, wow, that is a big blind spot. I can't believe I hadn't thought of that before. I'm going to de-risk in the following way. That's a low likelihood event, but if it were to occur, it would be devastating to my institution. I'm going to de-risk in this way and watch out for it. That is super challenging for a bank to do, a bank manager to do, and it's extremely challenging for a regulator to do. But I do think having that kind of sense of curiosity helps, that sense of openness, that ability to get out of silos and look around can help with that.
That's a great point. This just idea of we're not asking ourselves or others in risk management to predict the future, but to think about it.
Yeah.
Be curious what could happen and then run through those scenarios. I think that's a really great point. Probably need to end on that. Yes. So I think that people could ask you questions all day. This was terrific. Thank you so much.
Thanks so much,
It's
Kristen.
gotten me quite a lot to think about too. So maybe I'll follow you around at the break and really appreciate it. Thank you, everybody. Let's give a round of applause.
Thank you.